Hello and welcome to another video. Today we're going to talk about Pakistan. In just a few minutes, we'll take a closer look at the current economic situation in the country and discuss some of the key factors affecting its growth and stability. Pakistan is a developing country located in South Asia with a population of over 220 million people. Despite its rich cultural heritage and abundant natural resources, the country has faced many economic challenges over the years. Despite this, there are some positive developments taking place in the Pakistani economy, and the country has a lot of potential for growth and improvement. The economy is diverse, with key industries including agriculture, textiles, tourism, and information technology. However, factors such as inflation, a lack of investment, and structural inefficiencies have limited the country's growth potential. Nevertheless, the government has been working to create a more favorable environment for business and investment. The growth poles of Pakistan's economy are situated along the Indus River. The diversified economies of Karachi and major urban centers in Punjab, coexisting with lesser developed areas in other parts of the country. The Pakistani economy has suffered in the past from internal political turmoil, a rapidly growing population, and mixed levels of foreign investment. Foreign exchange reserves are bolstered by steady worker remittances, but a growing current account deficit, driven by a widening trade gap as import growth outstrips export expansion, could draw down reserves and dampen GDP growth in the medium term. Pakistan is currently undergoing a process of economic liberalization, including the privatization of all government corporations, which is aimed at attracting foreign investment and decreasing budget deficits. As of May 2021, the Pakistani government has predicted that future growth rates will be 5%, one of the highest in South Asia. According to the World Bank, the levels of poverty in Pakistan fell from 64.3% in 2001 to 21.9% in 2018. The country's improving macroeconomic position had led Moody's Investors Service to upgrade Pakistan's debt outlook to stable. After the change of government in April 2022, Moody's downgraded it to Caa1 outlook negative. In 2017, Pakistan's GDP, PPP, crossed $1 trillion. The current account deficit is one of the challenges that the country's economy is facing after the hikes in the prices of international commodities. By May 2019, the Pakistani rupee had undergone a year-on-year depreciation of 30% vis-a-vis the United States dollar. 2020 saw the beginning of Phase 2 of the China-Pakistan Economic Corridor, with new billion-dollar agreements. Pakistan gained independence from British rule in 1947, and since then, its economy has undergone several phases of development. In the early years of independence, the country focused on rebuilding its infrastructure and developing key industries such as agriculture, textiles, and manufacturing. The government implemented many protectionist policies to support these industries, and the economy grew steadily through the 1950s and 1960s. However, the 1970s marked a turning point for the Pakistani economy, as the country faced a series of economic and political challenges. The oil crisis of the 1970s resulted in inflation and a decline in economic growth, and the country was also plagued by political instability, including a series of military coups. In the 1980s, the government began to implement economic reforms, including liberalization of trade policies and a shift towards a market-based economy. These reforms helped to jumpstart economic growth, and the country experienced a period of stability and prosperity in the 1990s. In the early 2000s, the Pakistani economy was impacted by a series of external shocks, including the global financial crisis and the war on terror. The economy of Pakistan is characterized by a mixed structure, with both public and private sector entities playing a significant role in the country's economic development. Agriculture is the largest sector of the economy, accounting for around 20% of GDP, and is a major source of employment for the country's rural population. The textile industry is also a major contributor to the economy, accounting for around 60% of Pakistan's exports. The service sector is another key component of the Pakistani economy and includes industries such as finance, telecommunications, and tourism. The manufacturing sector, including industries such as pharmaceuticals, chemicals, and machinery, is also an important contributor to the economy and is growing rapidly. In recent years, there has been a growing focus on developing Pakistan's information technology and knowledge-based industries, as well as its energy sector, with the government investing in infrastructure and incentivizing private sector investment. The government of Pakistan plays an active role in the economy, with state-owned enterprises involved in key industries such as energy, transportation, and utilities. However, the government has also been working to liberalize the economy and create a more favorable environment for private sector investment, including initiatives to improve the business climate and reduce barriers to entry for new firms. Overall, the structure of the Pakistani economy is diverse, with a mix of public and private sector entities and a range of key industries contributing to economic growth and development. Thanks for watching this video on the economy in Pakistan. If you enjoyed it, please be sure to like, comment, and subscribe for more videos like this in the future.